Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. With news, US rate cut expectations are rising, but equities no longer think this is good for them. The American inflation rate, as measured by their CPI, came in below expectations, up 1.8% in the year to May, and an important undershoot from the 2% April level. This muted result probably strengthens the case for a rate cut by the Fed, but whether that will come in June or later is an open question. The US federal budget deficit grew by even further in May, topping $207 billion just for the month and reaching a massive $985 billion in the year to May. That is up 40% from the same period last year and the worst result since the global financial crisis. In Germany, more signs of a rush to buy sovereign bonds. German government bonds sold at a record low yield overnight. They sold 10-year bonds, debt paper, which will pay out in 10 years' time with a yield of minus 2.4%. It means investors holding them until they mature will lose money. China also released inflation data yesterday. The headline number was up 2.7% in the year to May and a 15-month high. Chinese banks extended 1.2 trillion yuan in new net loans in May, up from April, but well short of expectations. So far, bankers are not helping Beijing in their call for some private sector stimulus. While troubles with civil society are affecting business confidence in Hong Kong, and the equity markets dropped 1.7% yesterday after days of volatile trading. Shanghai equities fell 0.6% yesterday. Following on, European markets were down by about 0.4%, and today Wall Street is also lower, currently down 0.3% in late trade. In Australia, their prudential regulator wants to require banks to hold more capital, much more in fact, to cover for when they write higher risk loans. The US 10-year Treasury yield is drifting lower again and now just on 2.13%. Gold is up $6 today, now at $1,333 an ounce. US oil prices have fallen very sharply today, down about $2.50 a barrel, and they are now at just under $51 a barrel, while the Brent benchmark is under $60 a barrel. Higher US inventories and weakening global demand have driven this reassessment. The Kiwi dollar is little changed this morning and is now at 65.8 US cents. On the cross rates, we're firmer at 94.9 Australian cents, and against the euro, we're at 58.2 euro cents. That leaves the TWI unchanged at 70.5. I'm Steve Forbes, and that was 90 at 9, brought to you by interest.co.nz.